Hi, I'm Tom Elliott, Director of Beulah Capital, and this is our October share market update. Well, share markets at the moment were very strong up until about 2 or 3 weeks ago, and then of course the debt crisis that has been growing in the US really started to unravel people's confidence. As a result, in the last couple of weeks, shares have been volatile at best and generally being sold off, although it must be said not all that much. Most people, and I count myself amongst this group, feel that the two sides in American politics, President Obama and the Republicans, will sort out their debt differences. Of course, if they don't, the consequences could be very, very bad. Anyway, turning to stock-specific news, in our income strategy, we've kept our portfolio the way it is. The last reporting season was very, very good for dividends. There were no nasty surprises in terms of dividends being cut. The big banks, Telstra, those sorts of stocks continue to pay excellent fully franked dividends, and we continue to hold them in our income portfolio. In our takeover target portfolio, we've decided that we'll probably take some profits in Cube Holdings. It's performed very well for us. That is, of course, Chris Corrigan's freight and logistics business. And two stocks we're looking at to both reduce our cash weighting and to take advantage of the extra cash we'll get from selling part of our Cube holding are firstly Amcor. We think that Amcor will have strategic appeal to a buyer. It's in a duopolistic industry structure with Visy, and of course the improvement of the Australian economy, particularly since the election of the Abbott government just over a month ago, means that Amcor should see its fortune start to rise. Another stock we're looking at is actually Mortgage Choice. Now, the big four banks are prevented by government legislation from buying each other. So what they're trying to do instead is buy different channels to market. You know, in this case, a mortgage broker. We've seen Aussie Home Loans become essentially a subsidiary of the Commonwealth Bank, and I think that Mortgage Choice, which already has a substantial shareholder on its books, is probably the next one to go. So Mortgage Choice is one we're looking at. It is a little expensive at the moment. However, the housing market is very buoyant, and Mortgage Choice is one of the better known mortgage brokers out there. And in our ASX 200 portfolio, which is essentially a growth-oriented portfolio, we've decided to include two new stocks. We had some cash there, and we've decided it's time to start dipping our toe back in the waters, indeed, especially given we've had a fair bit of volatility recently. Fox, 21st Century Fox, used to be called News Corp, is one stock we've decided to put in the portfolio. Of course, News Corp split in two just a couple of months ago, and Fox is the portfolio of growth assets, film, pay TV, that sort of thing. We think that particular business is very well positioned for the future. And secondly, Double iNet. There's been a lot of argument about the National Broadband Network both before, during the election and after it. The NBN will still be built. It might be a slightly different version under Malcolm Turnbull than what it would have been under the Labor Party. But we think the second and third tier telcos will become the subject of a bit of a land grab for new customers. There's a few to choose from, although not that many, because they themselves have been taking over each other. Double iNet is our pick at the moment. Anyway, in the short term, the big thing we absolutely all have to cross our fingers and hope for is that the Americans get their debt deals sorted. That is the major dark cloud on the horizon at the moment. History tells us they'll do a deal, but it's nervous times while we wait for it. I've been Tom Elliott, Director of Beulah Capital. Thanks very much for listening. I look forward to your company again, same time next month.